What is going on, family? Welcome to another Stock Sermon Sunday. Welcome to the YouTube channel. Hopefully you are doing absolutely wonderful, whether you're rewatching here for the first time and you're just checking in. Maybe you rewatch the live replays. Absolutely appreciate each and every one of you tapping in week in and week out. Again, I know it's a broken record. I do apologize for the midweek videos in transition of kind of moving, personal stuff, family stuff, all that kind of stuff. But that's neither here nor there. Just kind of bring you into my life a little bit. Hey, I don't want to I'm a human being just like you. So we'll be moving a little bit, got some stuff going on the back end here, which is why I've been the midweek. Also clients, as you know, as a life coach, business coach, I do coaching as well as my main entity. So I'm coaching people through their businesses as entrepreneurs, startups, mid-sized businesses, as well as solopreneurs, and also just in general coaching this here. So live trading, coaching, personal stuff, it's all that. All right. So we'll be bringing back, once we get the new setup ready to go, we'll be bringing back the midweek videos. Y'all are really used to those. Jumping on here on the lives and then getting about 3 videos a week. So we want to bring those back. So just wanted to acknowledge that. I know it's a broken record, but just know that I have not forgotten about those midweek updates and videos. However, for those of you that are rewatching, I'm kind of speaking to the people that are rewatching this. Those that are live, we're about to get into it right here. So I see y'all down below. What's going on, Marlon? How are you doing? We are in our university, Leverage University, inside of our Discord every single day, Monday through Friday from 9:30 Eastern Standard Time till around 11:30 Eastern Standard Time. Okay. And I do jump on in the afternoons as well. I know some people work during those times, right? But we are live trading during those periods. If you do have a little time, if you have flexibility in your schedule, that is where we are. So you can follow along with the trades that we're given each and every day, each and every week. Even if you aren't able to jump on live trading, you're like, hey, I can't do that, so I can't jump in Leverage University or the Discord or anything going on. It's too active, too much stuff going on, Brian. We do have a lot of people that are busy professionals. Most of my clients and community members are busy professionals. They've got good jobs. They've got good businesses. They got families, got stuff going on, okay? So I do and am aware of that. I'm not some 21-year-old kid, 22-year-old kid. Okay. I'm a grown man too. I got responsibilities as well, but we can't have excuses of making things happen. Right. So I am posting trades. I am posting ideas. I'm posting long-term things. I'm posting entrepreneurial advice, recordings, trade reviews, things that you can go back to if you are busy during the day. All right. That is a mouthful. I want to get to it. Let me know where you're tuning in from down below. I like to give a little bit of a 5-minute buffer. This starts at 7:15 Eastern Standard Time. So put that on your calendar every single Sunday until, hey, it's just not there anymore. But we have been going strong. I don't know how long now, a couple of years at this point. All right. Cool. All right. Let's jump into it. I know some folks will be slowly trickling in as YouTube algorithm comes through. Thank you, YouTube, as well, for pushing out my content. I've been seeing the channel, new followers, new people subscribing. And if you have not subscribed, that does help out the channel. I'd appreciate it if you do subscribe, turn those notification bells as well so you know when we are live. All right. I'm home in Miami. Next time in Miami, Marlon, got to hit you up, bro. Haven't been to Miami in, I don't know how long. It's been a minute. Miami, like Vegas, has become this entrepreneurial hub. So you know how it is. You know how it is. It's become this hub of just young, hungry folks trying to make it happen. But Miami's a whole different beast. All right. So anyways, peace, love, and blessings to you. Let's jump into it. As always, the rundown, we will start right into it here. Gary, Indiana. What's going on, Corey? What's going on? What's going on? If y'all know about Gary, Indiana, post it down below. If y'all know why that city is important. All right. We got earnings. So for those of you that are new and want to get down to business, just know that I'm a human being. I like to have fun on here. I like to make it entertaining, engaging. So I do have that little buffer for 5 to 10 minutes roughly as you come in. We want to build a community. I'm not just delivering information. You will learn more about me. If you have any questions personally, anything like that in the chat, I am not just some trader and person that's on here. I do other things. This is, I'd say, my secondary business. This is my secondary thing. I just have this skill set of it and decided, hey, let me start sharing, because people were asking, like, how are you doing this on top of your coaching? How did you make it through COVID? I didn't know you traded, right? So if you have any other questions, I will answer Q&A throughout our time here together. Okay. All right. So we go over earnings. Fundamental analysis is our key. Okay. To start off with, fundamental analysis, if you're taking notes, includes earnings. It includes the data for the week, inflation data, any Fed meetings, which we'll talk about in a second, which is very highly important here this week. We've got other news outlets such as CNBC. We've got Trump speaking. We've got Fed speakers. We got Elon running his mouth at times. We got CEOs giving this viewpoint, that viewpoint. All of those things are fundamental analysis. We've got companies and their actual financials, right? So how is the company progressing? Is the company growing? Are they losing value? Are the consumers even interested in that company anymore? Are they going to be here for the next 5, 10, 20 years in relevancy? So all those things we want to analyze when we're doing our weekly analysis is our fundamentals. Once we get done with fundamentals, earnings, data for the week, how a company may be growing, a new company, we got IPOs. If you do have any IPOs or any new companies that you're like, hey, Brian, can you take a look at this company? Like, I heard it on the social media streets, or I heard someone else talk about it. We'll pull it up on the charts and take a look. I'll do my full analysis on that. Okay. And then once we get done with our fundamentals, we go over our technical analysis, which are the charts. The technical analysis, in my opinion, is where a lot of folks are missing opportunities. That is how you take the emotion out of your opinions on what's going to happen. Just because you shop at Walmart, okay, does not mean that Walmart is a great buy right now at all-time highs. Just because you hate Target because of their DEI and you have morals and you have values does not mean Target is not a great buy right now around $100, right? So there's a lot of times where people have opinions where, man, NVIDIA is going to the moon, Tesla's going to the moon, and the chart is saying it's at an all-time high. So the person may buy that particular stock at the wrong time, and then they're down for a period of time, and then they panic sell. That's typically the cycle of a, in my opinion, newbie entrepreneur, a newbie investor, or I'm going to even include myself in that, an uninformed, right? Because we were all uninformed at one time because a lot of us weren't taught these things. So if you weren't taught a stock chart, right, in your teenage years or your early adolescent years, you're now be like, oh, that's how they do it, right? So it's something new. So we have to unlearn and relearn. So what I would say focusing on here is for those, and I repeat myself, I know for those that come on my Stock Sermon Sundays all the time, but if you're hearing multiple times, it's going to be retained for you, right, as a learning opportunity. If you are focused on the technical analysis, in my opinion, 80 to 90% of the time, you're going to win. Okay. The fundamentals are there to kind of tie in the loose ends and the pieces. Okay. The technicals, the charts tell us exactly what's going to happen without emotion involved. Okay. So that's how a lot of us on these YouTube streets, social media streets, if you see someone saying, hey, be patient, this is going to come down, and then it happens, that's typically how we know. If you see someone say, hey, this is about to pop, you want to buy in the next couple of days, and then it pops and you're like, dang, why didn't I buy? It's how is that person so confident? It's typically they're focused on the technical analysis, the charts. Okay. Give me a 1 down below if that little segment helped anybody. If you are re-listening to this or you're here live, or maybe it's a reminder, give me a 1 down below if that helped. Give me a 2 if you're like, Brian, you're talking too much. Okay. Get down to it. Be honest with me. All right. All right. So this week on earnings reports, I've got Palo Alto, PNW, that is in the cybersecurity sector. That is going to be highly important. It's a big mover. Okay. It could be, something that we could trade on Tuesday morning. Now, I know some people watch my Stock Sermon Sundays. I know who y'all are. Okay. I got some folks that like earnings lottos. They like to go ahead and buy some options contracts before the earnings. Okay. And they've been getting burned. Okay. You know who you are if you're watching. All right. It's all love. Go watch my how to trade for earnings video on the channel. If you want to understand how to trade during earnings season, go watch that video. Just type in earnings on my channel after we do this, okay? You typically want to trade following the earnings report. That's trading, okay? With investing, meaning long-term shares that you hold, if you're a long-term investor, it doesn't really matter, okay? If it's a solid company and it dips, buy more. If it's a solid company and it goes crazy like Palantir did on its earnings, it keeps going higher, then you're in the clear. You're like, cool, more money for me. So the long-term investor, the earnings is just like a checkpoint. Is the company still doing okay? Do I still want to hold their shares? Is it time to take a little bit of profit before their earnings to lock in some things, right? Trading is what I'm talking about. Long-term investing for earnings is just a checkpoint for shareholders, okay? Making sure the company is still doing well. So Palo Alto, Home Depot, I'll check on that on Tuesday morning. It's always a decent mover. These others, just to be honest with you, I'm not too familiar. I have heard of some of these companies, but I don't trade them actively. So that's why you see people kind of skip over these. Like, what about this one? What about this one? I'll take a look at the chart, maybe take a look and see if and research the company. But I focused for trading wise on my main movers. Okay. Target. This is going to be a key earnings report for Target. If you have any type of emotional connection, or if you have a DEI moral value that you're like, hey, I'm not holding any Target shares, I'll just be honest with you. Target is a great buy right now. Okay. So you can decide to trade it. You can decide to buy it. You can decide to say, hey, I'm going to stick with my morals and values. It is a great buy. The only reason I'm saying that, because every time I mention Target, as an African-American man, I'm just saying, as a part of the African-American community and in the DEI space, if you believe in that and you feel like you have some emotional connections, I'm not going to get into that stuff. However, I've heard a lot about I'm not touching Target. That's fine. But I'm telling you right now, Target is a great buy. Okay. So you can do with that what you please. Take a look at Target. If you're like, hey, can I make some money off of it? And put it into something else. That's what I tell my clients. If they don't like holding something, I have a client that was very emotional about a certain tech company. And she was like, I'm not holding that, Brian. I don't believe in what they're doing. I'm not holding it. I said, okay, what if you had the mindset of making money off of it in spite of, with options contracts or options trading, took that money, right, and then put it over into another company that you believed in? She's like, I guess I could do that. Exactly. You don't have to hold the company. You don't have to, support them if you don't want to. But if it's a money opportunity and you can take your emotion out of it, cool. All right. Leverage that. TJ Maxx just absolutely just beastly, in my opinion. Their chart, I'll pull it up in a minute, but TJ Maxx just absolutely beastly. Just take a look at it on your free time. Estee Lauder, I'll take a look at their chart. That's another mover in the beauty space. Always really good there. Coty is another beauty space mover. Walmart, of course, and Zoom into the week. Okay. Zoom, big one right there. Workday always moves as well. So if you're inside of my community, inside of Leverage University, each day, as I always say, we'll take a look at some of these earnings, see if they're trading opportunities. If you're trading on your own or you're investing on your own and you're not inside Leverage University, do that what you please as far as trading and trading the charts on your own. All right. Cool. As a mouthful there, let's go into, and I always repeat myself every single time I do these Stock Sermon Sundays. For those of you that have never taught in a public platform, you got to repeat yourself because there's a new person each time. Remember when you were new. Okay. So if it sounds like a broken record, it's because there's someone new coming on here for the first time. All right. So economic calendar this week, home builder confidence, 10 a.m. data, always good to pay attention to 10 a.m. data there. Housing, it's kind of a light start to the week. So this is the big thing right here. The minutes of the FOMC meeting. Okay. So 2 p.m. on Wednesday, I expect that we will have some profit taking into this meeting. Okay. Does not mean this is an FOMC meeting, but it does mean they're going to have remarks. There's going to be people speaking, Fed Powell. They're going to be reading the minutes of the last FOMC meeting. Okay. And we just had some decent CPI data. So the market was rallying simply because there's an expected rate cut or multiple rate cuts coming. Now, I've been talking, if you were on my recent live, I think it was Ben and also my Morehouse brother, Dr. J. Okay. We were talking about this, and I'm just not a believer just yet that they're going to do these rate cuts. I just don't. I'm not a believer that they're going to do the rate cuts like they should. I think Powell's going to be late to the party. I think that if they do a rate cut, it's going to be out of some sympathy or some forceability. And the market was rallying because of that news. Okay. So we will see what actually happens, because if we have some type of rate cut and it's not done correctly and it's too late, then the market will pull back. Okay. If the rate cut does not happen and it's like, yeah, Powell again says something like, yeah, I don't like what I see, then it's like people give up their hopes and they're like, okay, and not another rate cut that's not coming that was promised to us, the market will pull back. Okay. So any pullback in this seasonality of September, October, which are typically more bearish seasons for buying opportunities into the holidays, that's what I'm expecting personally. Okay. So this is just seasonality. It's something that every investor waits for, is September, October. Get ready for some dip buys. Same thing with March and April. September, October, get ready for some pullback dip buys. All right. Thursday, we got PMI data. I'm thinking of the new person as well that's in here. Brian, what do you mean by pullback dip buys? Does that mean, like, you're scaring me? Does that mean I sell some of my Palantir now? Does that mean I sell some of my tech? No, I'm not saying sell anything. I'm not saying, doing any of that for financial reasons, financial advice reasons, which I'm not giving. All I'm saying is don't be surprised, just like some of you were surprised when you're like, man, Trump's getting in. We're bullish into the new year. 2025 is going to be crazy. Then the big dip kind of happens and people start panicking, right? When you expect that to happen, then you get ready to buy the dip. So you want to get ready to buy more Palantir. You want to get it ready to maybe buy some more HIMs if you're in that. You want to get ready to buy some of these healthcare stocks, some rotational stocks, right? So do with that what you please. If you understand it, if you don't, maybe just need a little bit more guidance, continue to watch the videos. If you want to join Leverage University, get more coaching on that. All right, keep asking questions, right? So that is what that means. So anytime you hear someone says, pull back, get ready to buy, right? If you don't have reserves to buy and you're like, hey, I'm all out of cash right now, I don't have anything to buy, they're going to have to weather the storm, right? Whether a 1 month storm, whether a weekly storm, whatever it is. And then, hey, we're back at all-time highs, right? Going into 2026 or the holidays or whatever. Okay. Just don't look at it. Does that help? Give me a 5 in the channel. Give me a 5 in the chat. Does that help everybody? 5 in the chat. Giving the factors they use, why would they cut? It makes no sense to me. I haven't believed them for a while. Marlon, if you're speaking my language, if we're on the same page, like, give me a rationale of why you're cutting. Yes, inflation is slowing slightly, right? Like, by the numbers book, inflation is slowing. Okay. Everyone's stock portfolio, retirement accounts, their crypto portfolios, everything is up, right? But there's still some questionable things with US debt. There's still some questionable things with consumer spending, right? It's a lot of stuff, in my opinion, that like penny pinching on, hey, are we really back to cut how we should? I don't believe it yet, personally. But that's just me. That's just my opinion. And in my opinion, a lot of rational investors, they're like, yeah, I know all y'all want rate cuts, and we all do, so you can refinance your home, refinance your car, credit card interest rates go down, all that stuff. Like, everyone wants to have lower interest rates so they can do what they do, right? But in rationale, if you're thinking like not selfishly, and thinking about the data and thinking about how really things are we really back to where we should be with the important things, right? So that's just my opinion. Let me know what y'all think down in the chat. Let me know. Marlon, it seems like we're on the same page. I don't see how they cut unemployment I don't see how they cut unemployment is stable. Yeah, I don't see it. But do you? Let me take a quick pause. I promise I won't be too long. 30 seconds here. A lot of anyone that comes on my channel more specifically, I want people to learn the psychology of how big money works, right? Like that's how a lot of retail investors, i.e. us, okay? I don't care what tax bracket you're in. If you got this amount of money, that amount of money, this amount of money, if you're not at the $1 billion level, if you don't have, in my opinion, 8 figures in cash, right? You're still a small business. You're still a retail investor. And that's okay, right? What I'm saying is simply this. If you come on this channel, you're going to learn how big money thinks. So my mind is not going to, man, what's the best for me? What's the best for me? It's like, what are they thinking about? What's the best interest of a $1 billion hedge fund? Do they want to buy some of these companies at all-time highs? You see the title of this, rotation of sectors. Hey, let me trim some off of my big tech. It's time to rotate into some recessionary safety stocks, such as healthcare. And let's flip the script, drop big tech again slightly into another buyable zone, get retail investors to sell some of their shares at a loss, right? I get my tax write-offs as a $1 billion hedge fund. And then I buy the dip back up, and then they have no cash because they essentially sold at a loss. And inflation to wage ratio is not even slowly coming back into an equilibrium, so they're never going to get to catch up. Am I speaking facts or not? That's how the psychology of this market works, right? Now, if you hold for a long term, then you're always going to win, right? But you got to be able to increase your cash flow and find the right time to buy with the amount of cash that someone may have on hand. So if someone's like, hey, Brian, let's just talk about, I got 10 grand to invest, right? I got 10 grand that I don't need. I literally don't need it. It could go away, right? Where does that person put that? If they put that at the wrong time of the market, then it's going to take them 1.5 to 2 years for that to actually maturate into where they want it to be. But if they wait until the right time, then that could take half that time. Does that make sense? So if you have, 8 figures in cash, then it doesn't matter where you buy. Just keep buying, keep buying, keep buying, keep buying, keep buying. Doesn't matter. If you have maybe multiple 6 figures in cash, cool. Just keep buying, keep buying, keep buying, keep buying. But the average person who I personally like to serve, not average, but the average working professional that makes maybe $80,000 to $225,000 a year, right? In that range, that is median. Hey, I'm doing well. Take care of my family, blah, blah, blah. I got this amount of money in my retirement account. I got this going on. What do I do with this 10, 20 grand that I'm half sitting on the side? Do I put it in savings and keep it there? Or do I take a piece out and move it around? All right. That's why the stock market a lot of times is frustrating for the average retail investor. I had a 6 in the chat. I just trimmed 20% looking for a correction in this seasonality. Yep. Beautiful. Love it, Marlon. Love it, man. Yeah, give me feedback, guys. If these little tangents, like learning opportunities, help, right? I included this because someone asked. It's like, hey, Brian, I kind of want to learn why you're doing this. I'm like, okay, cool. All right, so there's our fundamental analysis. We got the gist of our earnings in summary. We got the gist of our economic calendar for the week for trading. Okay, and we're coming into the end of the month, which comes in next week, which we got GDP, which will be very important. And we got PCE at the end of the month next week. So this is the time with this heavy data that's coming in, PMI, FOMC, end of a month, seasonal rotation going into September. Okay. This is when that profit taking can potentially come in going into the month of September. I'll show you on the charts here as we go into it. Let's jump into SPY, and I'm going to go back on SPY to last year at this time. Okay, so let's go back into July of 2024. Okay, excuse me, August of 2024. Okay, here's August of 2024. Okay, we did have a little capitulation drop here. Okay, I think that was the Japan thing, something. I forgot what it was, but this drop here at the beginning of August. August was bullish. Okay, August was bullish. August was bullish. Now, this year was a little bit different because it was an election year. So let me go back to 2023 to give more of a, because we're typically bullish all up into an election. So this is not a true representation of what happens in a true fall time. Okay. So let me go back to 2023. Okay. Say 2023, we're bullish into the summer months. Okay, we go into, and if you're following along, you're like, how do you know, Brian? I only see your cursor. Look at the bottom of my screen, you'll see the date. Okay, bottom of my screen, you'll see the date. Okay, so let me go into a monthly time frame because that might help out a little bit better. Okay, so here's the end of July. Here's August dip. And then here is some type of little bearish dip right there. Let me go into daily because that's not showing it either. I apologize. Uh, 2023. Okay, right here. Here we go. That's a better representation visual. Okay. So here is where we are right now. Right there. Okay. Look on my cursor here. If I go over the time frame, right there is August 17th, 2023. If I go to 21st, okay, and I'm on a daily chart. So each candle represents a day. Okay. If I go all the way to the end of August, literally we peak, okay, into August, going into that time frame bullish. Okay. Trying to retest the high again to take it out. So a bull coming into August is like, man, we're super bullish. Look at these higher lows all right here. Okay. Now what happened is we broke a trend. Do you see that trend break right there? So we're bullish, 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 all the way from, look exactly where the time frame is. March and April dip. Okay. You see the seasonality rotation. March and April dip in a bullish market typically happens. Tax write-offs, tax time, filings, so on and so forth. Bullish into a summer months. Okay. May, June, July. Okay. A little bit of a dip in August, which is what we had this year as well. Okay. A little bit of a trend break. Okay. Bulls pick up the dip. Okay. Into the month of August. All right. One last final little push to end off a great seasonality of about, what, 4 months, 4 or 5 months. Okay. We form a lower high there. And here is the start of September. Right there. There's on my cursor, September 1st. We dropped from, at that time, SPY was at 441 and we dropped to 431. Okay. The first week we drop. All right. Dip gets picked up again. Okay, cool. Another lower high into the middle of September. And then we take another big pullback correction into the month of October. So if you look at this full month of September, there it is right there. Okay. So I just want to give visually more specifically for people that have never seen it before, or a person that needs a reminder. Like, what are you talking about? Pullback, and like, we're bullish, Brian. I get it. Right. But this is what a lot of investors are prepared for if we have a pullback for the month of September. Okay. So now's the time to get ready to say, okay, what am I going to buy on the next dip? Okay. Or be prepared to just not look at my portfolio, not look at my retirement account. Okay. I was super up all summer. I was good. Thanks, Trump. Appreciate you. Now we're pulling back. Okay. So there is October. Dip gets bought up. Okay. So that was about a 6% correction right there, which is about right. 5 to 6%. Okay. For the month of September in 2023. Okay. That's almost in correction territory. Pull back. And then we dip even more for the remainder of October. Okay. October gets picked up. Just know that November, if we have a dip, November is bullish. Okay. It is bullish for typically crypto. It is bullish for big tech. It is going into earnings season. It is bullish. Okay. So there's November. Dip gets picked up all the way through November into the end of the year holidays. And we finish off the year strong, bullish into new highs. Okay. So everybody good there on understanding that. Okay. So if that happens again, let me turn on the moving indicators here and see if any moving averages were on that pullback. So I'm going to pull that up there. Okay. We started breaking below this daily 20, which is my key indicator typically for riding the wave on a daily time frame. We start breaking under it. It starts to get a little bit more bearish. Okay. It starts using it as resistance. Okay. We get back above, and guess where we pull back to, right? That daily 200, which is this orange line. So you see how far away it got away from this orange line, that daily 200. Okay. And it likes to gravitate back to it at some point. Okay. Gets really far away from it here in 2021. We were super bullish. Okay. Riding that daily 20, then pulls back to the daily 200. Okay. And tries to ride the wave back again. Okay. And when that daily 200 and that daily 20 start to intersect a little bit closer, do you see where that takeoff is? Okay. Right there in 2023, which was in March. Right there in 2023, which was seasonality of November. All right. Then starts riding the daily 20 bullish again. Okay. Now let's jump into here. Look at the situation that we have going on here, just kind of like we called this 2025 pullback when I was talking to my group about, hey, be prepared for 2025. Don't be surprised if we have some massive pullback. Okay. You don't know how far it's going to be. All right. So with that being said, let's look at where our daily 20 is right here. Okay. So as long as it's above that, which is at 634. I think our levels have been pretty on point. Let me know if you've been following the levels. If you're not inside of our university, inside of our Discord, let me know if these YouTube videos have been helping you out and saying, man, it did come back to that level. Okay. You can see the reasoning why. So that could be a big pullback level for the S&P 500 SPY ETF. Okay. Which will be 634, 635. All right. So it will look something like this coming back down into there. Okay, what does that mean, Brian? That just means that if we pull back to there, great. If it holds, then that's still bullish and we can come off of there to finish off the month strong. Okay. But I'm watching it keenly because if we start breaking underneath it like that, then we could come back into deeper levels as you see here, like we did last time, to retest 620 to 618. Okay. Now, if I look at the percentage pullback that's about 4% from the highs. Remember that 6 to 6.5% I just showed you in 2023? That's about right there, which would be 600. So when I'm doing my analysis, I'm getting myself prepared to say, man, if this daily 200 starts riding up here and following this, it might meet Let me turn it. Can I do have orange? It might meet that daily level right there. See how it's riding and riding and riding, intersects, takes off, pulls back, pulls back. And if this intersects right here at 600 and somehow that 600 holds, that could be that big takeoff area. Put a 6 in the chat. Does that help you understand when I'm talking about, hey, we're still bullish, but I want my community more specifically, or I want the person to say, man, did you see the stock market? It's pulling back. You see the stock market? It's crashing. What's going on? You know how I get that? Because I get it from my mother. Love you, Ma. If you're listening. She texts me and says, you see what's going on? Yes, I see I told you it's pulling back. Let me know if you got any family members like that. Man, you see what's going on? See, I told you. That's how we don't panic. Is I already am prepared for SPY to pull back 40 points to 600 at some point potentially during this fall season. And if it does, that is still bullish. We good? We good. Oh, I already love Brian. He's got the right spelling too. Does this dip have to happen in September, October? Can it happen early, New Year, January, February? That is a great question. That is a great question. Now, this type of seasonality, Brian, has been happening. If you go do your due diligence, I don't have the research up here. Maybe you can find it for you. You can DM me. I can send it to you. But the research from historical context, I'm talking about into the 80s. So we're talking about 30, 40, 50, 60 years of the stock market having this data showing that this particular seasonality happens almost majority of the time, right? Now, January, February could also be another dip time, just like it was in 2025, right? So the more the stock market goes up in a straight line, I'll give you another indicator of how that happens. So yeah, of course, January, February, but typically there is some type of small pullback every single October and September, if it is not an election season. Does that make sense? So let me turn off these indicators one more time. Let me make you even more confident about this. Okay? Because it's going to help you in the future to know, man, okay, if someone ever asks you, hey, when's the best time to buy a stock? March, April, September, October. Just wait for those months. Just typically wait for those months and you will see red at some point. And you're like, ooh, I can go shopping. So every year, if we're in a bullish year, continuously bullish, then that is the time that you want to buy. Okay. So I'm going to go back really quick to 2022, which was a bearish year. Okay. I want you to look at what happened in right here, September. It's a little small for some of you. Here's September and October right there. Okay, I'm gonna draw that line down. I already did 2023. Let's look at 2021. Right here. Down. September through October, middle of October. Okay. Let's go back to 2020, which was an oddball year, of course, but there, no matter what, there's September. Right there. It was a little bit sideways, but all the way through October, still down. Okay. There's COVID. Guess when COVID happened? March, April. So it didn't matter what it was, still March, April. Oh, 2019. Right here. Not as much, still down. Up 2018 tariffs. Right here, September, down. All right. So ironically, this 2018 is very relevant to now because if you remember, 2018 was Trump's term, right? So 2018 is when all the tariffs came in. Very similar to this year, right? So if we look at 2018, maybe this is a good representation of the actual tariffs and what's going on when Trump is in office. So you see that the volatility is a little bit different when Trump's in office. Slam down, back up, sideways, back up, slam down, back up. So this is definitely a Trump market right here, okay? So if we look at the beginning of 2018, this is all the tariff news. Isn't that what happened at the beginning of 2025? Okay. And then guess what? We're extremely bullish, back to all-time highs from that dip. But guess what? There's the seasonality of September, right? September was a little bullish, right? But guess what? Be prepared, be prepared, be prepared. Oh, gave back the whole move of the daggone summer months. The whole move. So you don't know how drastic the dip is going to be. You don't know where the bottom is going to be. You just want to be prepared saying, okay, sometime in these next 2 months, I'm going to get some buying opportunities. And I better hold on because I don't know how far. I don't know where's the bottom. I don't know what's going to happen, but just be prepared that when that dip happens, guess what happens afterwards? Do not panic sell. There's a recovery. I'm going to keep giving numbers. Give me a 2 in the chat if you're listening. Does that help? Give me a 2. Yeah, you're so welcome. Give me a 2. Everyone understand? Does that help everybody? For my seasoned folks, right? You may be, like, Brian, okay, cool. But maybe it's a reminder for you. We all need reminders. We're busy. That's why you're here is say, hey, I don't want to do all this research. Can you help us out? Awesome. 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 If you can't type in the chat, that's cool too. Hopefully you just understand. All right. I do speed up my analysis once everybody's on the same page. I never want to lose anybody. All right. So now that we understand seasonality, because I'd already done this research, I don't need to, do it for me. I'm doing it for y'all. So I already know this is coming at some point. I just don't know where the dip is going to be. And also keep in mind that if 2018 does repeat itself and we get back the whole move, there are some gap fills down here that could happen. Right. So 600 must hold. That's essentially my point right there. 600 on SPY, whenever that comes. All right. So until then, that is a bigger outlook. That is the bigger outlook. That is not any time happening in one day. That is not happening in a couple of days. That's not happening this week. I'm just saying 600 is my milestone right there that I wanted to hold. Okay. When it does happen. All right. So let's look at this on SPY. We have this consolidation here. And anytime you have a consolidation, now I'm moving into tighter time frames. So now I'm on an hourly time frame. So now I can analyze what's going to happen potentially this week and where our pullback levels are going to be. Okay. So we have this consolidation and that consolidation is getting a little bit heavy. Okay. So do you see that when we popped up trying to take out new all-time highs, 646 could not hold. 646 again popped up, lower high. 646 again popped up, lower high. Okay. Ironically, for my futures traders, this is also a very psychological level on the futures market, which is ES, which is 6,500. So anytime we're at a very key psych level, you see right there, 6,500, right, is going to try to do something to either break out of it or reject it. And you can see the consolidation a little bit better on the futures market. So it is chopping in this consolidation. Whenever you have a consolidation, a big move is coming. Either it's going to break up, right, and break out of that 6,500, which would be above 646 on SPY. If we get above that 646, we're most likely going to 650. Okay. So it's trying to break above so it can get to that nice round SPY 650 level. Okay. So on SPY, if I go back here, does that not look this like the same thing? It's consolidating right now above this 642 to 643 level. Okay. So all we're watching for this week into tomorrow is what do we do out of here? If we break up, cool. We can take it up to 650. Okay. And your respective tech stocks, your respective stocks, cool. I always like to focus on the bullish case first because we are still bullish. All right. I never want to put fear in anyone that only sees the stock market going up. All right. So as the bullish case, if we break out of this 646 into 647, we're squeezing up into 650. Okay. Now let me show you more of my thought process, what could potentially happen since we're coming into seasonality. Starts to get weak and tight in here. We start to get something like this. Okay. So if we start to get something like this and you start to see it, man, this is just not, it's just fading. You start to see more red. You start to see the market kind of fading a little bit. It doesn't really have that big Hulk bullish candles. You don't, in your Robinhood account, you don't see a straight up green line for my Robinhood folks, right? If you haven't gravitated towards the actual charts, let me show you what it would look like for you. Okay. Does that look more familiar for my Robinhood folks that don't want to jump on the charts yet? Okay. So this is a line chart. Okay. And that line chart would start looking the same way. All right. So if you've been listening and watching my channel and watching other channels as well, remember former resistance becomes support. So Brian, if it pulls back, where is it going to? SPY is trying to get back to where the buyers are, and we broke above last time. So do you see this key zone right around in here, which would be 636? Okay. There's also a little zone right around here, which would be 638. Okay. So those will be the two levels for my bulls or buyers or anyone that only plays the upside. That's like, man, I don't want to get caught slipping up here. If you're trading calls or you're in the futures market and you're looking at buys, you don't want to get caught up here slipping and this pulls all the way back. And then we rip back up like that. Okay. So that is where you would want to ideally, if you were a bull, be prepared for a pullback into 636 to 638, somewhere in this zone, and let that thing fall. Okay. And look for some type of signal that is holding. Okay. If you're also a bull, look for that breakout above the previous highs. Okay. All right. Let's talk about my downside folks. Anyone that trades the downside with me, if you're in the community, you know that some of y'all have gravitated like, Brian, I'm kind of liking this downside a little bit when I catch it right, when I can actually be patient, so on and so forth. Okay. So what I would always be, mindful of for the downside, if you're trading puts or sells in futures, is I always like to catch it closer to the resistance level. So what I would like to see is maybe one more little pop back up, okay, into that 645 and show me that is another lower high, and then catch something like that. Does that mean I'm going to trade SPY? Not necessarily, but I'm looking for that on SPY to trade my respective stocks back down. Okay. So if you trade SPY, you trade ES, that's what I would be looking for, is another lower high pop into 645. Okay. Let that fail. Let me go back to my charts. Get off this line chart. Okay. Another pop into here for a candle. We always look at SPY and QQQ to make sure that we're trading ideally with the market. If I see a pop like that, okay, I'll be looking for something like this: break of trend, pop, and a failure. Okay, we'd have some type of top wick. It looks something like that. Pushes up, wicks back down, and then that would be an entry for failure back down into 640. But ideally, you'd want a break of lows for that to happen to really continue. Okay. So we'll watch that this week to see what some of the data comes in. If the data is poor or the data is a little sketchy, then we'll get a little pullback. If the data is good, we'll probably squeeze up back to highs 646. All right. Let me turn on after hours here. Show you what that looks like. All right. We good on SPY? Can I get a one really quick from just some of you? Bull flag or bear flag? I see that. I mean, technically, it's more of a bullish consolidation to answer your question. All right. We're still have higher lows, higher highs. All right. So once we have that, it's technically more of a bullish consolidation. That just means that technically, if you bull flag higher like that. Okay. But this could fail, and then it turns into a failed flag consolidation, and then we break down out of it. Okay. Kind of like this. If I look to my left, here you go, Brian. Here's a perfect example. Do you see how we were consolidating and get a little bit heavy up here back in the end of July? It pops up. Everyone thinks we're bullish, going higher, and it fails. All right, catch people slipping, pulls all the way back down to here. They panic sell a little bit. Stop losses get hit. People try to catch the falling knife, right? But guess where it stopped? It pulled back to the deeper buy level back here of 618, right? Which was a buy zone. If I look left on my charts, buy, 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 right? This was a buy zone, but it blasted right through it. Right? Buy, blasted right through that, turned it into resistance and kept going. Does that help, Brian? So it's doing somewhat of the same thing right here where it's getting a little bit heavy. Pops up. And now we're just got to be patient of which way it goes. Okay. All right, cool. What is it? 7:15. Okay, cool. I typically have about an hour and 15 minutes, hour 30 max. So we're right on time still, and we'll get to our respective stocks. QQQ, if you understand this, it's going to help you trade your respective stocks a lot better because you know seasonality, you know what data is coming in, and you know what to expect, what could potentially happen, because it makes going down to all these stocks that you're wanting to ask about, Apple, Amazon, Google, Tesla. If the market's doing something, then those respective stocks will typically follow if they're in the same pattern. Okay. Now, QQQ, as you can see, is a little bit weaker. Okay. It has already started to pull back versus SPY has been holding up. And that's simply because of healthcare. All right. So QQQ, tech index, NASDAQ, whatever you want to call it. This has already been pulling back. Now this looks more like a bull flag because it has already reached the previous high. So this, if it holds up, it is already in a level. All right. It's already in like a buy zone right around here at 575 to 576. So what that means is you do not want to get caught slipping with QQQ down here thinking it's weak and it does something like that. Okay. So QQQ ultimately wants to get back to 580. All right. It wants to get back to 580. And if it stays down here in this area and you kind of see that it's not really going much further, right? It's starting to get bought up. Another big buy up there. You see right there, it pushes down, immediately dip buy, right? It wants to try to get back up to this 580 to take out the high. Again, one last try. Okay. So that is what I'm kind of expecting out of big tech is maybe one last little try. However, if we keep fading, right, another pop and I see it fading somewhat like that, then I'm like, okay, the market's weak. Okay. We get underneath this level. Look what happened last time. We got underneath 575 and underneath that level. Look at this drastic pullback here. Okay. I'm not saying it's going to happen that drastically again, but it is possible if we start getting underneath that level and bulls want to step out of the way. We got 570 and we got 565 in play. So another $10 drop pullback on QQQ. Okay. So right now, bullish, holding up 575, 576. Watch that for a hold, for calls, for buys on the NASDAQ market futures. Kind of see here, it looks beautiful there. We'll see what happens tonight, but right now, getting bought up, as you can see, right in that zone. So bull stepping up, getting bought up, and we'll see if we get a little bit bullish in the morning and break out of that. Okay. All right. IWM. Same type of thing. IWM, I think personally, you know, this little gap fill back up. Let me show you what it looks like. We've been waiting on this for a minute and IWM's been playing around, but this is right in that buy zone. Remember, small caps made a run due to those projected rate cuts. Small cap companies love rate cuts, and it did not fill the gap back up to the top. So I'm really watching this IWM, that this was a straight up move, which was due for a pullback, straight down move, consolidate, and see if it can try to retest to fill that little gray gap area right here. This is a gap. Okay. So IWM, I want to keep a strong eye on small caps that it's holding. Obviously, we got another rejection, but this could be a double bottom. This could start curling and curling. And next thing you know, you got a green candle coming up like that. Okay. Now, am I saying it's going to happen that way? Not necessarily. I got to watch this level of 226 on IWM. 226, above 226, still bullish. Above 226, still bullish. You can see that was a big level that we broke above 226. Above that, right? Holding, holding, holding. Now, if we break below it for some reason, cool. It's coming lower. It's going to get ugly down into there. But it's so strong off this push that I'm not really thinking about that until it actually happens. All right. So I have like a slight bias, but I'm always open to the other side. All right. So my bias is still slightly bullish because we pull back into some supports. Right. But I want to keep my head on a swivel if we do break those lows. So IWM, gap fill. Anytime I have gap fills, get highly interested in that particular move. All right. All right, let's jump into our main stocks here. Apple. Really quick, Apple 235 is a very key level. If we stay below 235, right, Apple wants to have a bigger pullback after this big, massive move, right, on that. The reason why I'm saying Apple 235 is very important is because this is a weekly resistance. Okay. This is a weekly resistance. I'm on a weekly time frame. 235, pull back to 215. 235, pull back to 220. 235, big sellers right there back to 215. Okay. Now I know we have broken up very strongly and people have got their eyes on Apple like, man, I missed the move. I missed the move. Please do not chase. Okay. If you're not already in Apple shares, if you're not already in Apple calls, back down here at 215, 220, right? And you've got long dated calls, right? I'm waiting on Apple to do one of two things, either to short it, right, for that big move back down, but I need to see some confirmation of a trend break right there. So if I see below 230 on Apple, right, for now, y'all know put whispers. I don't know if I need to coin that or something, but I love puts. I love the downside. I don't know why. Okay. But it gets drastic and it prints money when you get it right. So if I see that break below 230 and I start seeing that candle come out of there like that, right, I may be looking to short Apple back down into this 220 if I see the market also weak. So if I see QQQ breaking 575, if I see SPY breaking underneath that 640, things like that, then I look over at Apple and it's breaking down. I'm going to get ready for that put setup back down. But until then, Apple's super strong. I do not want to touch any trading against it just yet. Okay. because it could break above 235 and start squeezing into 240. All right. But it's at a very keen weekly level. And I want to pay very close attention to any weekly or big daily levels where I see a lot of action, 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 action. Cool. All right. So Apple on high alert there of what it does here around that 230 to 235. Okay. Amazon, beautiful trade on Friday. I'm loving this. This is my like A+ setup for puts. Typically, we absolutely slam these in the Discord. This is one of my A+ setups for puts. Okay, a trend break and a retest of a lower high to start coming down pretty drastically through that gap fill. Okay. So one of the top watches I'm watching this week for Amazon has made a great move. It's kind of like Apple, right? It dropped on earnings, filled the earnings gap. Okay. Now it's back up at that earnings level, and we've got some strong sellers stepping in and profit takers. It's not always sellers. It's just, hey, I made my dip on Amazon. I'm going to wait for it to come lower. We're coming into seasonality, right? I'm coming into heavy sellers. We're coming into the end of the month. We're coming into heavy data. Cool. Amazon pull back one more time back into 220. So this is one of my top watches for puts. As long as Amazon is below this 234 level. Okay. I may even start a position on Amazon puts, maybe around 232, 233. The higher it goes, the more I like it. What sounds crazy to some of y'all that don't know how to trade the downside yet. It's like, huh? I would be a buyer. I don't want to be a buyer up here. Let me keep it simple for my beginners. I don't want to be a buyer where I see red and a big pullback, I want to be a buyer where I see big dip buy changes in direction. So if I miss the move, cool. If you don't know how to trade the downside, where do you want to be a buyer on Amazon? Back at 224, 225. Let it fill this gap and be a buyer back down here. Where do I want to be a buyer even further? Back down into 218. Right? So you see I have these yellow lines marked and I have my big green areas marked where I want to be a buyer. I do not want to be a buyer up into Amazon for trading purposes. If you're a long-term investor in Amazon, which I believe everyone should be, just deep dollar cost averaging. If you got an average cost below 150, below 100, right, on Amazon, things like that, you're not worried about what's happening here. I'm just talking about people that are trading or, hey, should I buy Amazon at 225, at 218? If it breaks highs, cool. We got 240. We got more heavy resistance coming into seasonality. Do I think Amazon's a $250 plus stock? Yes. Do I think Amazon's a $300 stock? Yes. Right. But timing of your entries is very, very important. So right now I'm looking to short Amazon. If I see more resistance or a double top at 232, 233, and I see it breaking back below 230, it's got a gap fill back below, easy money back down. Okay. So anyone in Leverage University, please keep me on a swivel to not get distracted. I will have my alerts on. That's one of my top watches. Made good money on it on Friday, and don't want to miss it again if it gives us the signal. Okay. Google. All right. Google's at all-time highs, back again. Got to pay attention. I know some of y'all want 210. I know some people want breakout of Google above highs. When this happens, when it's up here, it's kind of dependent on data. Okay. That's why I take emotion out of it. Do I think Google is a sleeper of a stock? Do I think it's a 230, 300? Yeah, in my opinion, I think it's a sleeper. It has been a sleeper since 140, 170 even. Okay. And we've been talking about this for a while. But at 206, it's in resistance. All right. So you either need a break above 207 for Google, or you need just a simple hold of 200. Okay. Hold of 200 is very key on Google because it took Google forever to just get it back above 200. Okay. So Google, I'm not really interested in yet because it's just kind of grinding higher. Right. I've got Google shares. I'm fine with that. I know Ben's been killing Google with his equity trading. That's awesome. But as far as options trading goes, I do not, y'all know me, I do not want to be a part of a grind higher. That's hold your shares, let it go. I want a big move back down, back up, back down, back up, something like that. All right. So Google, if I mark where the previous high is, where buyers are, is right here at this 197 to 200 zone. See how it dipped down there very quickly, got bought up almost immediately. Okay. So it's got this higher low thing going on, and that's fine. But I want to see it back at 200, which I'll mark there. So I'm not really interested in Google for trading purposes. All right. It's not giving me a big enough trend break. It's just grinding. Not really, interested in that. Okay. There's the move on Google. So I need that trend to break for me to get involved again on Google. All right. Microsoft going some big techs, big earnings pop right there. Gave back the earnings move, and Microsoft, in my opinion, just needs to pull back. Right. Microsoft is a major player, as y'all know, in QQQ. It's a major player in the S&P 500. Right. And it has been absolutely just stellar, stunning. I don't know what else to say since the dip buy at 350. Okay. So it has not had a red month, right, since March. Okay. So when Brian was asking seasonality, it is about due time. Okay. That's why we're starting to see this red month come in for August on Microsoft, because this is not bearish. This is essentially just profit taking. This is people taking some profits off the table from a great summer month. And when everyone starts taking profits off the table, that's when people get caught slipping and it pulls back because people are taking their profits. Right. So Microsoft, not really interested in trading until maybe I see a little bit more trend break out of this. All right. So just kind of want to draw that trend line right there and see it maybe break back below 515, or if it gets back below that 500, that's when we're going to start seeing some selling coming in, because that's a big psych level that Microsoft broke above. But other than that, 500, 515, bullish, holding, that's fine. 500, 515, as long as above 500, Microsoft bullish. Okay. Put your respective stocks down below for anyone that wants me to cover something more specifically. Meta getting really interesting up here. Okay. Getting really interesting. It is at a close psychological level of 800. Okay. And you can start to see this area is starting to get some heavy top wicks. And again, very similar to Amazon, it's almost giving me that my A plus setup, which for puts for me, A plus setup is a trend break. It kind of comes into this rising wedge consolidation like that. And once I start to see that trend break out of there and a big red candle, all I'm ready for is the retest. And then I'm looking for a big fall. Get ready. All right. It would look something like that. My pullback would be back to 650 first. Gap fill is all of a bonus. I don't think that would happen unless October came in and we have a big, pullback in the market. Okay. All right. So that's typically what I'm looking for right there. Meta, interesting. 800, just watching it, what it does, 800, or a big trend break underneath this 780. 780, very, very important for Meta to hold up. And we got some gaps below. So if you see Meta tumbling one of these days in the next 2, 3, 4 weeks, just shoot me a DM, Brian, like Meta is tumbling. Or if you're in the community, like, hey, Brian, Meta's, tumbling. Okay, cool. Already charted it. I know what's happening. If it breaks above 800, cool. That's fine too. But Meta's ready to cool off, in my opinion, along with Microsoft. All right, let's jump into coin really quick and Tesla. Tesla 330, great move out of this. Tesla has a beautiful chart, in my opinion. It just all depends on what's going to happen this fall. So if you see, we marked out Tesla here. You've probably seen this chart all across social media where every investor is looking at this breakout here that Tesla has done. You see this consolidation, bullish, breakout, retest, and most people are looking for that into the fall. Okay. So I think Tesla personally, if you're not interested in Tesla, there's a lot of folks that have, just frustrated with Elon at this point and all that kind of stuff. Their emotions are involved. But if you're a long-term Tesla holder, or if you don't want to get involved with Tesla more specifically, I would focus on TSLL. Okay. It's the leveraged bullish version of Tesla. If you want to keep it simple, a cheaper version. Okay. So when Tesla was at all-time highs, TSLL was at $40. It's at $12 right now. Same chart, right? So this is how many people can get involved instead of saying, man, I don't want to spend $330 on one share of Tesla. I don't even want to do a long dated call option on Tesla personally, because I just don't know what it's doing, right? We in Leverage University or anyone else typically says, okay, cool. I can do 50 to 100 shares or 1,000 shares or whatever it is of TSLL for 10, $12. I'll put that into it. Cool. Because I can visually see it going to 20, 24. Tesla gets back to $400, $500, like everyone says it's going to. And if Elon is who he says he is, cool. Then TSLL will be back to $30 and you've 3 extra money. So we like to buy TSLL around that $10 mark. Okay. Anywhere between $10 to $12, you can start getting a position, right? $7 to $8 is load the boat zone. Okay. $7, $8. You can see what happens every time it gets to 7, 8, goes to 16, 7, 8, goes to 23, 40, and it's coming back into this kind of consolidation. 10 right there, middle zone, load the boat zone. And then you've got gaps above. These little gray areas are gaps that need to be filled, and they will be filled eventually over time. All right. So Tesla, there you go. I know it's a lot of speculation, a lot of things. And I talk about Tesla from a safety advantage point, especially for folks that just don't know what Tesla's going to do and they don't have time to look at charts. Okay. If you're a big boy Tesla person, big girl Tesla person, I would watch 300 to 330, right? As long as Tesla's holding up 300, is consolidating above this nice level here on a weekly time frame. Okay. You can see it clearly there. Weekly 300, former support, or excuse me, resistance, got above, consolidating, broke out, and you typically see something like this if it's going to hold true. Cool. There's Tesla, 300 to 330, that $30 window is Tesla. All right. All this white are all my semiconductors. I expect semiconductors personally to just follow NVIDIA. We got NVIDIA earnings coming up. NVIDIA earnings are next week. Okay. Next week. So I am personally going to watch some of the semiconductors this week of maybe profit taking, but a lot of consolidation, a lot of sideways movement on a lot of semiconductors. But you saw that last week with the MU that we hit a couple of times, and we said the levels and it did exactly what we thought, right? MU pull back, right? If it gives us another pop, I'm shorting MU one more time before NVIDIA, but beautiful head and shoulders there on NVIDIA, MU. There's a gap fill on TSM, okay? The semiconductor manufacturer company, 250, got below that 250 and holding. There's that big gap fill right there, pull back. ARM kind of consolidating down here. And then we got NVIDIA just consolidating, almost looking like SPY, okay? Just sitting up here above this 178 area, trying to decide if it can break above 185. Okay. Everyone wants NVIDIA at 200, right? Everyone and their mother wants to say, man, NVIDIA, just get to 200, man, before you pull back, get to 200. It's all depending on these earnings right now. And they could do anything, right? If you're on here and you know who you are, Amazon slammed people, okay? Amazon was expected to do like a Google, expected to, go higher, expected to break out like Palantir, and it pulled from 236 back to 212, almost a $40 drop, okay? $30 drop, roughly, okay? So any massive company that people have emotions on, you don't know what the earnings are going to do. Now, am I saying that NVIDIA is going to miss earnings? No, I do not expect that. But what I am saying is don't get your emotions so involved that a big major company can't pull back or break out based on earnings. So we want to be prepared for both. Okay. If it dips, I think the dip's going to get bought up, especially if they have good earnings. Zhang's going to save the day, pull back, rip back up. All right. If it breaks out, I'm looking to short it most likely once it finds a top. If it breaks out, it's going to be a big gap fill. I'm going to look to short that back down. We good? NVIDIA is going to be beautiful trading next week for NVIDIA earnings. So all semiconductors I'll be watching this week. I will not be really trading NVIDIA because it's probably going to be a bunch of sideways movement. Maybe I'll take a look at AMD if it gives that, or MU more. We'll see. Now, ARM, a top watch here for ARM. I know a lot of you had MU questions, right? It is still bullish above this 118. Okay, that is a support level. Okay, 115 to 118. A lot of you asked last week about MU, and guess what it did? We charted it out beautifully. Right above that 100, a lot of you were asking, guess what it did? Bull flag, broke up. Now pull back and see if it can hold to break up higher, right? ARM, highly watching this like an MU move, right? ARM has been pulling back, but it has a lot of gap back to the upside. Y'all see this? So as ARM pulls back here, right, does it give the opportunity to snatch back up like that? Very similar to this move. See it pulling back into this level and then snatches back up. So ARM, I'm going to keep a high alert on, high watch on that of what it does if it starts to find a bottom somewhere. Right now, got it about 135. This will do a type of Amazon move, an Apple move, if it breaks above this 146. If it gives something like that, maybe NVIDIA earnings or something, it's going back to 170. It's going to try to take out that high of 170. Let me check the chat really quick. I see that trade market. Okay, cool. If there's anything specific, if this is good, give me a 1 in the chat. If I'm going at a good pace, if everyone's understanding, keep me, updated about how they're doing. Are we still on the same page? Ones. We good? Still good? All right, we're right at time. I'm going to rush through these last couple on here and get to those buying opportunities. Okay. So the first, we're really just trading, right? I think all big tech, wait for the pullback on all big tech, in my opinion, for those buying opportunities. And here's some buys that I would get prepared for if you're not already in. Okay. Robinhood, same thing. Robinhood is extremely bullish, but starting to get some heaviness up here, in my opinion, of 120. So I'm going to be just watching Robinhood again, back up into these highs. It did not fill that full gap back to 100. So Robinhood, we might take a look at that this week again, if it does give some type of signal of exhaustion. Okay. Beautiful head and shoulders here on Robinhood for trading purposes right there. Right. Shout out to Dreama who caught that. She caught 126% on options trading inside the community on her Robinhood trade. She caught it right underneath this 114 break. Beautiful there, and took it down to about 110. All right. So I'll watch Robinhood again this week. This is very similar to Amazon. So Amazon and Robinhood I'll be paying attention to this week. All right. All right, let's get into some buys. Brian, what is something that I should watch for if I just want to buy some shares, want to get involved? I'm going to touch on TTD. Okay. TTD is one that I would consider. They had great earnings. Go do your own due diligence. Okay. Anywhere around $50, I think is a great buy for a starter position if you want to do shares, or you can do long dated call options. Okay. So TTD, I'm watching very closely because it is based on the charts right in a key zone where it absolutely took off. Okay. I'm on a weekly time frame, and it's given me since 2020, every time TTD's at $50, it goes back to roughly around $85 to $90. Okay. $50, 85 to 90, $50, 85 to 90. That one went to 115 or something right there. 115. So it's back in this zone again, and we're starting to see a little bit of a hold. Okay. A little bit of a hold. I need to see a little bit more out of this, but anytime you start to see this little curling action, it starts to build. Okay. This is the same thing that happened in Dollar General. So I always do a reference of what that looks like. When Dollar General got back to $65, right in that buy zone, said, hey, I pay attention. Right here. Same thing. Started consolidating, found a bottom, people picking up some shares, and then ready for takeoff. It goes from 65 to 120 very quickly. Double up on money. Okay. So TTD is one that I would do your due diligence on, not financial advice. If you're inside the community, we already have it charted, ready to go. Have I entered this just yet? That's always the question. No, I have not, because anytime I have something that's falling like this, I never want to catch a falling knife. I want to confirm a bottom. I typically have a couple of days. All right, we got 1, 2, 3, 4, 5, 6 days, roughly a week. And I start seeing, can I see a higher time frame candle start showing me something? So weekly time frame, can I get a green candle pop? Can I get a trend break out of here? Something like, it would look something like this. All right. If you need another reference, it looks exactly like my next thing that I'm going to, which is UNH. When everyone was like, buy UNH, buy UNH, buy UNH, get ready for it. And no one, everyone's questioning it. I don't know, the CEO, blah, 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 blah. Right. And then you just don't know when the day is going to happen. But if you look at the chart, UNH is where? On a monthly time frame in a buy zone. Take off. Okay. Right at about 250. Just say 250. And went to 300 in one day. Okay. Now, do you want to chase this? No. But this is a signal. This is a sign saying, oh, wait. Well, Warren Buffett's buying. I thought he was out the game. Right. You wait for this pop. And you wait for a red day, maybe this gap fill to pull back. And that will be your next chance to get in for a higher low of around 260 to 270. Okay. You can even pick some up at 300 if you're a UNH person. But this is a signal. This is when you want to get involved. This is where you're like, okay, all right. Buyers want to step in heavy here. Okay, cool. I'll start paying attention a little bit closer. I wasn't sure on this downfall, but now, cool. Same thing on TTD. We can get involved a little bit early, all right? If you want around 50, but my target on TTD, if you want to know, Brian, where's it going? Right? $70 is my minimal target right now. The big target is back to 90. So from 50 to 70. So if I go to options on TTD, right? And just say I go all the way out till June on options contracts. If you want to do shares, that's cool too. If you're just like a share buy, hey, I'll pick up a couple shares, whatever, partial shares. But if you're in options and I go out until 70 calls, which are $550, right? Relative, if that's cheap for you, if that's expensive for you, I don't know, right? I'm just giving, if my target is $70 in the next year, right? I'll tell you how much roughly those will be. Not financial advice, but here's the chart on options. This is what we call a leap option, okay? This is a little bit sooner, obviously, because it's in June. It's not January of 2027, but if that gap starts to fill, it'll be right here. $70 pending, theta decay for my seasoned folks and whatnot. But middle of that gap is about $2,000. So $500 to $2,000. So a $1,500 roughly profit off one contract. Right? Pretty good return, right? So that's how you start looking at some of these that are beaten down, is saying, do I want to buy shares? Maybe I'll buy some shares. Maybe I'll do my due diligence on the company, which is what I like this company? What is it, Brian? I focus on the charts and then I do my due diligence on the company. So I've already done my due diligence on the company, right? There was nothing wrong with their earnings. It's oversold. It's dramatized, very similar to UNH, and it's presenting another opportunity, especially at a cheap price point, in my opinion, right? So TTD, pay attention to that. If you don't want to even look any further, you can go into January 15th, 2027. You see these already moving. There's a percentage up from like Friday. They're already moving, right? So you can go further and say, well, if that gap fully fills, maybe I can go, just to 100 calls for 2 years out, right? 100's been $400, give it an extra year and some change, right? Year and 4 months, right? And that call option could move as well. That full gap fills back to 100. Those will be from roughly $300-$400 back to roughly $2,000 to $1,800, right? So that is another way that you can leverage your savings accounts or any accounts, not financial advice, but just say you want to make more than 5, 4, 3% on your money. And you're like, hey, let me take $500 out, not even think about it for another year, and buy this option contract for a year out and not even look at it. Right. And you can compound your money a little bit faster. Okay. So I think leap options and big swing trade option contracts, people don't use options, in my opinion, as they should as a long-term investor. Because most people think about options trading as fast and risky and, I'll just buy the shares. I'll just put it in a savings account. It's like you can do options on the buy side all the way out. And if you're more savvy, Ben, I know you're on here, or anyone that sells options on the sell side, if you own 100 shares. Okay. It's a whole nother conversation. So buying a long dated call option contract can be lucrative as well. Okay. All right. Maybe I just need to let me put a 5 in the chat as we're rounding this out here, because I'm at the end. As you see, I'm at the end of my watch list. All these white are all the healthcare companies. So they're pretty much the same. Put a 5 in the chat if you want me to create a video over maybe leap options or swing trades, like how to trade, how to use options as a long-term investor, something like that. I think that would be highly requested, in my opinion, because a lot of folks don't want to do day trading. They don't want to do short trading. They don't see the value in that, and that's fine. But then they're also frustrated that their long-term portfolio, maybe I can make a little bit more, right? Expedite it just a little bit safely. Cool. All right, let's run through these. We're right on time, right at that hour and a half mark. Okay. So UNH, we went over. I'd wait for a pullback, ideally, right? Wait for a pullback. Do not chase this, in my opinion, if you're not already in for trading, right? But now you want to keep a close eye on it at 300. Okay. 300. There is a gap here at 295. If we break below 295 for some weird reason, and people want to take their profits from this big move into the fall season, they could bring it back down into those 270s. Okay. But if UNH, for some weird reason, if you don't get this pullback and you want to get involved around 300, but be prepared to add more, UNH is $500 plus. It's a $500+ stock. Okay. So if you think about it in that terms, if you're like, man, do I get it at 270? Do I get it at 300? Like, it's a $500 plus stock, right? So it doesn't matter necessarily if you're a long-term investor, if you get it at 300 or you get it at 270, just be prepared to dollar cost average if you're buying UNH shares, which is a big player, right? $300 per share is a big player. Okay. Now, here's another way that you can invest into it. Appreciate my boy James, UNHG. He finds a lot of leverage stocks inside of our community. Okay. UNHG is the leveraged bullish version. It's very similar to TSLL. So if you can't get UNH, right, you need to wait for this to pull back. But this was called out inside of our community at $10 to $11. So just say you had 100 shares at $10, right? And it goes to $17. Well, that's shares, right? So Wait for this to pull back, ideally through this gap, but you can invest into UNH with UNHG. Okay. Same chart. As you can see, these gaps, my buy areas will be somewhere around 12 bucks. I don't know if we're going to get that 10 again, but 12 to maybe 15 bucks. I would say more close to that $12 range if you missed out on that, but you can dollar cost average on UNH with UNHG. Okay. Elevance is another one. Not too much talked about, but same roughly chart as UNH. Okay. Buy area 270, almost the same exact price point, to be honest with you. Elevance is a $500 stock as well. Okay. If you're not too familiar with Elevance, it's in the healthcare space. It's a health insurer, very similar. So yeah. Novo Nordisk, Novo, same chart. Almost all these healthcare companies are the same chart. Every healthcare company is a buy opportunity. Okay. Novo, we've got this back to, let me see, daily 20 is back at $100. So Novo, minimally a $70 to $100 stock. 70 is my first stop. Okay. 70 to 75, but $100 on Novo. Okay. So I'm not giving any specific levels necessarily. I'm just saying this is a buy opportunity for all of these. Okay. All of these are within range right now. They are within range right now for dollar cost averaging, getting involved, getting a little bit of shares. It can be partial shares, but every healthcare company right now on this list is in a buy zone for the next, in my opinion, year and a half to 2 years. Okay. For shares. Centene, one of my top, I'm already involved in Centene at 26 bucks. Okay. $26. Centene, a lot of some of my community already has leap options on this out until 2027. This is another one that's fairly cheap, as you can see. Centene, I've got back to roughly around 75 bucks as well. Okay. So Centene daily 20 is sitting right at 65. I've got it back to around 75 in the long term. It's got to stop right in the short term around 40 bucks. So in the short term, my short term target is $40 right now, but this is back to $70, $75. Okay. Look at this beautiful trend break here. Do you see this downtrend? See how the trend has broken? Now we're just waiting for any type of pullback, or you can get involved now. And this is at some point, even if it pulls back like that, back down, at some point, it's going to give us that back to minimally 40. Okay. I'm gonna have to pull this recording back up. I'm gonna have to title it or something, but in the next 2 years. But Centene, $40 minimum. Right now, if you get into shares around 25, under $30, you're gonna double your money at 60. Right? So 100% on your money, whatever you do, it's $100. You make $100 in 2 years. Whatever it is. Right? But Centene, the reason I'm so confident in this in the healthcare insurance space is because if my boy Min is on here, we went to pharmacy school in St. Louis. This is a St. Louis based company. I'm very familiar with the company. It's not insider trading or anything. It's just I know the back end of the company or the reason, like what they're doing. They got beat down simply because of Medicare, Medicaid. That's not going away anytime soon. So there's a little bit of questions around that, but Centene is still a solid company. And we know the healthcare space is a $1 trillion industry. Health insurance, unfortunately, it's killing folks with medical bills. I don't agree with what healthcare is doing right now. But as far as if you want to make money in the market, participate in that way and stick it to the man. Right? Stick it to your health insurer, stick it to whoever by making money off of them. Right? So Centene, there we go. Hims, this is a big player that a lot of folks made a lot of money off of. Hims back underneath $15 and is doing beautifully what I wanted it to do. Do not chase the highs. Wait for the chart to show you something on a pullback. And I've got a pullback zone right now around $40. Okay. That is a buy zone on Hims right at $40. it could stop a little bit before that where it gets a little relief. Okay. If you think about it, HIMS right now, they're pouring out all this stuff, HIMS deadline reminder, action, lawsuit, 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 lawsuit. They're pulling it back, right? Once that lawsuit is done, hey, we've recovered the law, everything's done, washed, blah, 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 blah. Cool. It's going to rip right back up. Okay. They did the same thing with UNH, right? They're doing the same thing, or they did the same thing. I'm not saying these companies are the same, but they did the same thing with SMCI. Lawsuit, lawsuit. Then they bought it back up at $15 and rode it to almost 70. Okay. So I'm not saying that these companies are going to go to the moon, right, or do what they do. They still got more things to prove, but they'll beat these companies down, and then you can participate in the dip buy. All right. So HIMS, another one that I pay attention to, approaching a buy zone, right? It is below the daily 20, as you can see, but it's approaching this daily 200, which is another area of opportunity right at 40 bucks. Okay. So if it dips a little bit lower, I mean, it could bounce off of here. It'll probably have some type of higher low to go like that. Now, my bigger buy zone of HIMS is back down here through this gap fill at $30. Okay. And that's right on that trend line. Okay. So I've got a trend line right there on HIMS. I'm going to put it in big blue. Right. So every time we pull back right to that trend line. And this scared a lot of folks right here. It just snapped back from 72 all-time highs, pulled all the way back to 23. And then went right back up. So if it does the same thing and we get some type of crazy dip back into close to 30, that would still technically be a daily. Higher low off that trend line. Cool. All right. Any final last, one last one. So my final ones that you saw towards the end of this video are all the ones that for my long-term investors, buys, leaps. So anyone that stayed to the end is getting the bonus, in my opinion, because these are the ones that a lot of people have questions on. What's the next Palantir? What's the next, big move? What's the next thing that's sleeping? All right. Kava, another one in a buy zone. It's at 65 bucks. Now, people have questions about Kava because it's in the retail, it's like consumer spending space. It's in the retail space. It's in restaurants, dining, which is based on consumer spending, but it is in a buy zone based on a chart. Okay. 60 bucks right around this area. And if it reclaims 70, it's at least going to fill this gap back from its earnings right there, back to 80 bucks very quickly. Okay. So Kava is another one. So if you made a list, if you want to look at my screen right quick, okay, I'm going to repeat it one more time for anybody that did not get everything for the buy opportunities, the things for bigger ones in the next 6 months to a year. Okay. And if you have any others, put it in the chat. Kava, Merck, HIMS, CNC, Novo, Elevance, UNH. I'll put Lulu in there as well. Lululemon in there as well. Okay, do your own due diligence. It doesn't have to be all of them. And then Target is another one. Okay, here's a Target chart. Here's another one. See Target in this buy zone right around 90 to 100 bucks. Target 130 minimally, bigger target 180 on Target. Okay. So these yellow lines are my profit targets for where it's headed. Okay. All right. UPS, one more. UPS is another one. Please join Leverage University if you feel so inclined, or just give me a like, subscribe, share the video out with anybody, because these is bonus. I'm going overboard this time. A little bit of bonus. UPS, another one in a buy zone. I'm not saying a lot of people have questions about UPS, but minimally my target is back to 115 on UPS, back to 100 and 115. Okay, 100 and then 115. It's got to show me that first before we get anywhere near 150, 200, anything like that. But it is in a interesting buy zone. Okay. So they're beating it up with all the bad news, Amazon dropping them, or they're dropping Amazon, all this kind of stuff. I'm looking at the chart. Okay. The risk to reward is beautiful for a move back to at least 100. Something crazy happens. Everybody was counting it out here. It went from $70 to $200. I don't know what needs to happen, but yeah. Interesting zone right here, UPS. Okay. And TTD. Yeah, I don't mind 90 days out on TTD. I don't. Tanvir, you said, I'm sorry, I missed that, Tanvir. I apologize. UNH 330, 822 call. Is it going to go to 330 by this week? It's all based on data. It all be based on data, and it depends on where your entry was. If you got an entry before the pop, or if you got an entry around, I'd say 295 to 300, I'd keep a break-even stop loss and then re-enter. So if you're up 10 beer and you're still holding it, keep a break-even stop loss. Okay. If you got in thinking it's going to break out and you got in late at 310, I'd really consider that tomorrow, because you have no time on it. Right. And you know what that means. I've got to know you on here. So if it starts pulling back through this gap and it breaks underneath 300, it's going to start getting more aggressive, because that trend broke back down to 295. Okay. So if you're up, break even stop loss. If you got in late and your entry was close to 310 and you're down tomorrow, consider tomorrow being that decision point, right? Give it a chance tomorrow. See if it pops one last time, get you into the positive. But 330, you got to look at this RSI 330 right now. It's possible, right? With some positive data, right? I'm not counting that UNH is not going to go higher up into this level here, right? But does it pull back first and then go? And how long is that going to take? But if it breaks above the previous day high, which is roughly 312, then you can get that push to 320 and you'll be up, and then we're going higher, right? Does that help, Tanvir? So I'm always a little bit hesitant about getting into something after it's already made a big move. So if you weren't already in, wait for the pullback or a break of previous day high. What a lot of folks do is, and I'm not saying to you this, Tanvir, just to end off on a teaching lesson. A lot of folks see something pop and they immediately get in and they hold. Like, man, do you see UNH? I'm getting in. And they don't realize that typically people that were already in are taking their profits, driving it back down, then they pull it back up. So they get trapped at the highs, right? So those two things, always pretty difficult to trade. I typically wait for it to show me something after a big pop like that. But it is overextended. You see that trend breaking. So it may, retest one more time, back up. And that's the key point. Does it break out or reject? Does that help? Just looking through final last questions. All right, cool. All right, everybody. Peace, love, and blessings to you. I appreciate you all for sticking with me a little bit of extra time. I know it's late on the East Coast, all right, but I would not be keeping you if I didn't think it was important. All right. Go once, going twice. Any final last things? We good? We good? We good? We good? All right, cool. If there's any requests, shoot me a DM on IG. Everything's right there on the screen, as you can see. If you're not followed, if you're not subscribed, if you're not joined Leverage University, every link will be down below. I'd love to have you inside. If y'all need one-on-ones, I do one-on-one coaching for this particular skill set, along with entrepreneurial life coaching and business coaching as well. All right, cool. All right, thank y'all so much. Talk to you later. Have a great week of trading. I'll see y'all inside Leverage University for anyone that's in live trading. And we'll tackle another week ending off the month of August, which is crazy to think about. All right, talk to you later. Have a great rest of your Sunday. Bye-bye.